Good morning. Welcome to another segment of the Rivero-Gordimer & Company Summer Training Session. I'm Sam Lazara. Happy you could join us here again today. This morning, myself and Brooke Dawson will be covering some basic information regarding the Form 990 and how nonprofit organizations can use this information to benefit your organization. We will also touch on organizations that provide ratings and evaluations to nonprofit organizations towards the end of this presentation. Before we get started, just some quick introductions on myself and Brooke. Again, I'm born and raised here in Tampa. I'm a proud graduate of the University of South Florida. Go Bulls. I started my public accounting career in 1986, joined our firm in 1989, and I became a shareholder in 1998. I've had a great and fulfilling career serving many nonprofit organizations that have helped shape the landscape of our Tampa Bay community. Brooke Dawson is an audit senior manager here at our firm who joined us in 2014 and just celebrated her 10-year work anniversary. Brooke is a native of Clearwater, graduate of Florida Gulf Coast University, and has considerable experience in the not-for-profit and tax-exempt client area. She leads our not-for-profit industry committee at our firm and is a tremendous asset to the clients that she serves for us. Here at Rivero-Gordimer & Company, we pride ourselves in our service to not-for-profit industry and to all the industries that we're involved with. We're the largest Tampa-based accounting firm, as well as the exclusive member of the Not-for-Profit CPAs Alliance here in the Tampa Bay area. Our team is involved with numerous charities and organizations, and we have over 500 years of combined accounting experience. Our firm was also named the Small Business of the Year in 2018, and received the One Tampa Bay Award in 2022, recognizing our service in the Tampa Bay area. Thanks for joining us again this morning, and thank you to our nonprofit committee for all the hard work that you do throughout the year, including organizing these sessions. Just a quick overview of what our plans are for this morning. We're going to first cover some basic tax-exempt activities and tax-exempt basics that I'll quickly cover. Brooke will go through how to read the Form 990, telling your story, some of the key schedules and important information within the 990. She'll also hit on the 990T as well as the UBIT information. And then last, I'll wrap it up with some of the information on the watchdog agencies and how they use the Form 990 as well. If you have any questions, you can use the Q&A feature that's included on your information there, or you can email us at events@riverorgcocpa.com. Before we really dive into more of the information, just some general thoughts on the Form 990. While it may seem like this is like many other IRS tax returns, which are generally compliance in nature, the Form 990 is used by organizations to communicate your mission, your accomplishments, and your financial health. It's an informational return. It's not an income tax return. And nonprofits should use this information to educate donors and grantors, to demonstrate your transparency and your credibility to your stakeholders by the disclosure of your governance policies, your finances, and also provide narratives on your program accomplishments, community impact, and the financial stability of your organization. There's approximately 2 million nonprofit organizations here in the U.S., with approximately 1.5 million of those being what we call 501c3 organizations. This is the most popular organization that you see. C3 organizations are organized and operated exclusively for exempt purposes set forth within the tax-exempt code. None of the earnings that may benefit or private individuals within a C3 organization. C3 groups may not attempt to influence legislation as a substantial part of its activities. And last, C3 organizations may not participate in any campaign activities that are for or against political candidates. Every 501c3 nonprofit organization is either classified as a private foundation or a public charity. Public charities generally receive a greater portion of their financial support from the general public or from governmental units and have a greater interaction with the public. Private foundation is typically controlled by members of a family or by a small group of individuals, and it derives its financial support from a smaller number of sources and or its investment income. Private foundations their primary activity is the distribution of grants to other charitable organizations and to individuals, rather than the direct operation of its charitable programs. It's common for the board of a private foundation to be related individuals and or to be made up of just a small number of individuals. The purpose of the Form 990, really it's the primary tool that the IRS uses in gathering information about tax-exempt organizations, educating organizations about tax law requirements, and promoting compliance. As I mentioned before, organizations should use the Form 990 to share information with the public about their programs and their accomplishments. Many states rely on the Form 990 to perform charitable and other regulatory oversight. The Form 990 had significant changes back in 2008. However, no major changes have occurred since that point. Here in the state of Florida, you're required to submit your Form 990 as part of the annual registration of solicitation of contributions through the Florida Department of Agriculture. There's some recent changes to the registration process that took effect on July 1st, 2024. So please consult with your RG&Co representative on these updates or see our recent article on our website that's just been published. There are also some tools that are available within the IRS website as well. The most common one, or the newest one actually, is the Tax Exempt Organization Search Tool. This tool allows users to look across multiple data files and information in one of the searches. With this new tool, users can view images of the organization's 990, 990Z, the PF, 990T, but it's really only for C3 organizations. You can also search for favorable determination letters that are issued by the IRS when an organization applies for or has met the requirements for tax-exempt status. These tools also can be used to find whether an organization is eligible to receive tax-deductible contributions and if it has had any tax-exempt status revoked because of its failure to file the required forms and notices for 3 consecutive years. A grantor or contributor may generally rely on the continued validity of a determination letter or its ruling until the IRS makes a public announcement on the entity's change in status. This here just shows a snapshot from within the IRS website that shows the tax-exempt tool that's available. It's a search tool that you can use and gather information. As I mentioned, it's relatively new towards this information, but it's a very helpful tool as well. Some of the basic filing requirements for these particular forms. Small organizations with gross receipts less than $50,000 in 1 year can file a Form 990N, or the postcard. The Form 990EZ is a short form, and it can only be used for nonprofits that have gross receipts of less than $200,000 and total assets that are less than $500,000 in any 1 year. Nonprofits that do not meet these requirements must file the full Form 990. The EZ form requires information on revenue, expenses, assets, program service accomplishments, and key personnel. The Form 990 PF is the annual tax returns used by private foundations that are exempt from income taxes. Private foundations report their taxable income, their charitable distributions, and activities on the PF, along with revenues, expenses, the balance sheets, staff salaries, and more information. Who doesn't have to file the Form 990s? It's basically churches and other faith-based organizations are exempt from filing the Form 990. The terms that are listed here on this slide actually give you the formal definition that's within the IRS code, but basically churches and other faith-based groups are exempt from filing this return. Again, information regarding when and where and how to file the Form 990. The due date for the Form 990 and the 990EZ and the PF is the 15th day of the 5th month of the organization's accounting period and when that ends. For organizations with a calendar year end, The due date of the return is May 15th. For organizations with a June 30th year end, the due date of the 990 is November 15th. If that due date falls on a Saturday or a Sunday or a holiday, then the due date is extended to the next business day. Nonprofit organizations may apply for an automatic 6-month extension using the Form 8868. Some of the information regarding failure to file. We hope you never have to deal with this, but occasionally things happen and you have situations that come about from there. Small organizations have penalties for filing or late on their tax returns as well. Those organizations are those with gross receipts less than $1.1 million. The penalties are basically $20 a day, not to exceed the lesser of $11,000 or 5% of the gross receipts of the organization for that year. Organizations that are larger in nature, that have gross receipts exceeding $1.1 million, are subject to bigger penalties. Those penalties are generally $110 a day for each day late, with a maximum penalty of $56,000. Organizations can request abatements to these penalties by showing reasonable cause for the delay or failure to file. Please note that automatic revocation of your tax-exempt status occurs when exempt organizations that are required to file the annual return, either the 990, the EZ, or the PF, or submit the annual electronic notice or the postcard, the 990EN. If this does not occur for 3 consecutive years, then you could lose your exemption status. I'm now going to turn it over to Brooke Dawson to walk us through some of the additional specific information regarding the Form 990.
Thanks, Sam, and good morning. Thank you again for joining us. As Sam mentioned, my name is Brooke Dawson, and I will be walking you through the Form 990 and how to read it. As Sam previously mentioned, Form 990 is a public document. Even if it is not listed on your website or provided directly to a donor, it is searchable by anyone via the IRS website. Form 990 is not only an informational form you submit to the IRS, it is also a tool for donors and grantors to understand your organization. A properly completed Form 990 should highlight the organization's mission, significant activities and accomplishments, total program expenditures and grants, as well as operational effectiveness and financial stability. Although the form may seem quite cumbersome at times, there are actually only a few main pages and parts. We will walk through part by part and touch on the supplemental schedules that follow, starting with Form 990 Parts 1 and 2. These are essentially a summary of the schedules and pages that follow them. They list basic information about the organization, including the address, telephone number, website, year-end, and the name of the principal officer. Also listed here are the organization's mission, number of board members, and employees. Following is a summary of financial metrics. Each line in the financial statement summary notes a reference to where that number can be found in the supporting schedules that follow. For example, line 8 of Part 1 notes that contributions and grants total can be found on Part 8, line 1H. This first page also notes if it's an amended return, a final return, or if the organization has changed its name or address. Page 2 of the 990, Part 3, may be the most important part of the whole form. Here, a donor can see what the organization has accomplished throughout the year and where the funds were spent. Part 3 allows the organization to highlight their 3 biggest programs. Each program service accomplishment notes the total expenses associated with the program, along with any grants included with those expenses and the revenue generated by that program. Each also allows 12 lines for the organization to tell their story. Any information above and beyond that will flow to Schedule O in the back of the form. This is important to remember, as sometimes a donor won't make it that are back in the schedules. These 12 lines are pivotal in getting your point across, so it is important to be concise. Here, you would include programmatic data, such as number of scholarships given, number of individuals served, or geographical areas impacted by your cause. The organization can also note here if any new programs were implemented in the current year. Part 4 of the 990 is a series of 38 questions that trigger additional schedules and reporting. Some of these questions note a minimum dollar threshold for disclosure. Questions here of note include whether or not the organization obtained audited financials. There's questions regarding contributions, special events, maintenance of endowments and other assets, as well as compensation of officers and trustees. Questions regarding contributions to political campaigns or payment on lobbying activities also are here. If an organization is checking yes to any of these questions, it is likely that an additional schedule will have to be included when the form is filed. Part 5 of the form outlines IRS filing and tax compliance. The organization is required to enter the number of 1099s and W-2s issued for the corresponding calendar year. For those with fiscal years, this would be the year on the tax form. For example, a June 30th, 2024 fiscal year would be filing a 2023 tax form and put their 2023 1096 and W-3 information here. A series of questions are followed asking about various tax forms and potentially taxable transactions that would create unrelated business income, which I will touch on later as we make our way through the form. Part 6 is one of the more important areas on the 990 as it is analyzed by watchdog agencies to assess the strength of an organization's policies and procedures. It is divided into 3 sections: governing body and management, policies, and disclosures. Section A of Part 6 notes the number of voting members as well as the number of independent voting members. Questions follow regarding board-related party relationships, as well as the general roles and powers of the board of directors. The IRS and federal tax law does not have any set guidelines regarding independence or the structure of nonprofit boards. However, it is still required that the organization answer all of these questions. Moving on next to policies. Similar to board composure, there are no actual formal rules regarding the organization having policies and procedures in question. However, it does not mean that they aren't important. As noted on the slide, whether or not a policy or procedure is applicable and implemented at an organization depends on the size of the organization. These policies and procedures noted on Form 990 include review of the Form 990 and approval by the Board of Directors, conflict of interest policies for board and management, a written whistleblower policy or document retention policy. Additionally, the form has questions related to determining compensation for executives and key employees. This question can be very important to donors in understanding if an organization is a good steward of their donations. The last piece of this section is disclosures. This area asks what states you are required the 990 to be filed in, which depends on which states you are soliciting contributions in. It also asks how Forms 1093 and 990 are available to the public. The answers here are limited to the organization's website, another organization's website, upon request, and other. If other is checked, you'll be required to provide some additional explanation on Schedule O in the back of the form. Part 7 of the Form 990 lists the board of directors, officers, and key employees. Compensation is reported in 3 places total on Form 990, and the amounts can vary in each place, which is important to note. Here, all officers, key employees, and highest compensated employees will have their reported compensation from their W-2 detailed here. Similar to my previous discussion on Form W-3 and 1096, the appropriate W-2 number would correspond with the tax year of the form being filed. All board members of the organization should also be listed here with their appropriate titles. This would include your board chair, vice chair, secretary, treasurer, and any other designations your board may have. Additionally, their average number of hours devoted to the organization should be listed. If the member serves on a related board, such as a foundation serving a larger nonprofit, the average hours a week for the related organization would also be listed. Similarly, if an officer is compensated by a related organization, such as a foundation or the parent organization, the compensation is reflected in column E here. The bottom of page 7 also details additional questions on compensation, which can trigger Schedule J. There's also questions regarding independent contractors that were compensated over $100,000 for the corresponding tax year. So this is an area that we get a lot of questions on. So to reiterate, on this schedule, you note your current key employees, current 5 highest compensated employees, and any former officers, key employees, and highest compensated employees. Let's touch quickly on what a key employee is. A key employee is defined as an employee of the organization other than an officer, director, or trustee who meets the 3 following tests. They received over $150,000 in compensation for the calendar year. Again, emphasis here on the calendar year. Has responsibilities similar to those of an officer with influence over the organization. So an example could be someone that has the authority to control certain expenditures or budgeting decisions. Lastly, this person is listed in the top 20 of the organization's highest compensated employees. So again, just to provide a little clarification on that, we get a lot of questions in this area when they're filling this out. So about 9 pages into the return, we have finally made it to the financial information. Part 8 details the statement of revenue. This starts with contributions, dues, campaigns, and grants at the top, separating out your non-cash contributions and contributions from special events. Further down the page highlights program service revenue, allowing several lines for different types. Then comes investment income, income from rent, sale of securities, inventories, and other assets, as well as fundraising. Each of these income lines has a corresponding column including related or exempt revenue, unrelated business income, and revenue excluded under sections 512 through 514. All the amounts total at the very bottom, line 12. Any revenue indicated in the column of unrelated business income would be addressed later in Form 990T. Next, we have Part 9, Statement of Functional Expenses. Here, expenses are listed by their natural classification and functionalized by their type. This includes program service expenses, management in general, and fundraising expenses. The IRS notes that the method of allocation between these expenses must be documented in your organization's records. If you receive an audit or review, there's generally a nice footnote disclosure on the methodology here that would suffice. Outside the classifications listed, which include occupancy, professional fees, legal, accounting, there are several lines at the bottom that are allocated for other expenses that may not fall into these IRS form categories. One item of note here, and a question we often get, is that investment expenses are required to be reported here on the functional expense, whereas for GAAP financial statements, they're reported net in investment income in your revenue section. Part 10 is the organization's balance sheet. This part is fairly straightforward, simply outlining assets, liabilities, and net assets at year end. The current instructions on the form reflect somewhat recent updates in non-for-profit financial reporting under Accounting Standards Update 2016-14, which primarily includes the change from 3 net asset classes to 2. One item of note here: any listing of asset or liabilities in the other lines may result in the need for additional disclosure on Schedule O as to what those assets and liabilities are. Lastly, page 11 and 12 provide additional financial information, with Part 11 reconciling any changes in net assets not included in the statement of revenues or functional expenses. The most notable here, again another area that we get questions on, would be your unrealized gains or losses, which are not factored in to the Form 990. Part 12 details questions on the organization's accounting method, whether or not an audit or review was performed in the calendar fiscal period. Additionally, a last question notes if a federal single audit was required and subsequently performed. With that, we have finally reached the end of the form. Now we will briefly touch on the many supporting schedules of the Form 990 that were triggered by the questions information reported on by the organization. Schedule A, public charity status and public support. Schedule B, schedule of contributors. Schedule C, political campaign and lobbying activities. Schedule D, supplemental financial statements. Schedule E, schools. Schedule F, statement of activities outside the United States. Schedule G, supplemental information regarding fundraising or gaming activities. Schedule H, hospitals. Schedule I, supplemental information on grants and other assistance to organizations. Schedule J, compensation information. Schedule K, supplemental information on tax-exempt bonds. Schedule L, transactions with interested persons. Schedule M, non-cash contributions. Schedule N, liquidation, termination, or dissolution. Schedule O, supplemental information to Form 990. I talked about this schedule a lot throughout. And Schedule R, related organizations and unrelated partnerships. I'm not going to touch on all of these today, but I will discuss a few of these in detail, starting with Schedule A. Schedule A confirms the organization is eligible to be listed as a public charity by declaring all of the income that the charity receives. It outlines the public charity status of the organization and its public support. Essentially, here we have 2 tests taking place, depending on the type of box that was checked in Part 1, page 1 of the schedule. Parts 2 and 3 will require financial information over a 5-year period. Generally, the 509A1 test requires that the organization receive at least 1/3 of its support from contributions from the general public or meet the 10% facts and circumstance test. Schedule B reports contributions the organization has received from individuals and/or other organizations that are reported as revenue. This includes all cash and non-cash property. Contributors include individuals, partnerships, corporations, other exempt organizations, and governmental organizations. The threshold is generally $5,000 for reporting on Schedule B. However, there are special rules that allow some organizations to raise that threshold. For most organizations, the public disclosure copy of Form 990 does not include any contributor information, including name and address. It is important to note that Schedule B should correspond with the organization's basis of accounting. So when you're filling out your 990, you check whether you're cash or accrual basis. This is another question that we get quite a bit and is extremely important because you could be reporting duplicate contributions year over year. So an example here is if your organization is on the accrual basis of accounting, Schedule B needs to reflect this accordingly. So if you're receiving a $500,000 pledge from donor A in the current year, $100,000 in cash payment is made on that pledge, you're going to report $500,000 reflected on Schedule B from donor A because that is what your GAAP financials and accrual financials are reporting as revenue for that year. Skipping over Schedule C to Schedule D, Schedule D provides reporting of donor-advised funds, escrow accounts, endowment funds, and supplemental financial information, including information on land, buildings, and equipment. This one is also very important if you receive an audit. It provides a reconciliation of revenue and expenses from the audited financial statements to the return. This reconciliation is similar to what a for-profit tax return Schedule M1 may report. This schedule will affect a majority of nonprofit organizations depending on what you're reporting, but generally there's balance sheet items that are triggering this. This is a great place to look if you're trying to tie out your audit to your 990, extremely straightforward. Skipping over to Schedule G. Schedule G primarily highlights special events and fundraising. This requires disclosure of fundraising methods and is similar to information that's required to be reported to the IRS in Forms 1093 or 1094. In addition, organizations must name their 10 highest paid fundraisers who receive at least $5,000 in compensation. So if you're paying someone to do a direct mail campaign, do fundraising on your behalf as a 1099, it needs to be listed here. Organizations are also required to list the states where they're registered because state charity bureaus will sometimes cross-check this information. You also are listing your special events here, your 2 largest and any other special events, their associated revenues and expenses. Moving on to Schedule J. Schedule J is one of the places in the 990 I mentioned that compensation information is reported. Schedule J provides supplemental detail on how compensation is determined, including a detailed breakdown of compensation to anyone that received more than $150,000 in a calendar year. Again, emphasis here on a calendar year. If you received less than $150,000, you will automatically be excluded from this schedule. Part 1 has questions regarding different types of compensation, including the receipt of first-class travel, housing allowances, and then also outlines how executives' compensation is determined. So there's some options to be checked here, including a common written employment contract, an independent committee that decides on compensation, board approval, among others. Schedule J, Part 2, then details the actual compensation received by executives for the calendar year, including base and bonus pay, as well as any retirement and other non-taxable benefits received. Schedule M requires organizations receiving more than $25,000 in non-cash contributions in their calendar or fiscal year to report those contributions, as well as provide additional information regarding the valuation methods used for financial reporting, along with the number of actual contributions received. So a common example here flowing to Schedule M would be donated stock. So if you receive donated stock with a value over $25,000, this would be recorded on lines 9 through 12 of the form, and you would detail the number of shares, the value, and how the organization determined that value. Schedule O. Schedule O provides supplemental information and responses to the various questions throughout Form 990 to explain the organization's operations. Some examples of what would actually flow to Schedule O would be continuation of the mission or program services. Again, I noted if you don't fit that on the front in the 12 lines, this is where it's going to go, all the way in the back of the form. Any additional information, further explanation on governance, management, and disclosure, any information on how officer compensation is determined, any other assets or other expenses. Schedule R is used by an organization that files Form 990 to provide information on related organizations and certain transactions with those related organizations and unrelated partnerships. A good example here is a foundation that supports a larger nonprofit. The foundation would be listed here along with any monetary support that the foundation provided to the organization. Pretty straightforward here, essentially just describing the relationship between that related party. Now that we have reached the end of the form and gone through all of those schedules, I will quickly touch on Form 990T. Even though an organization is recognized as tax exempt, it may still be liable for tax on its unrelated business income tax. A nonprofit that has $1,000 or more in unrelated business income tax must file a Form 990T. Unrelated business income is income from a trade or business regularly conducted by an exempt organization and not substantially related to the performance by the organization and its exempt activity. So there is some specific exclusions included here. This includes interest, dividends, annuities, payments with respect to securities loans, and other income from ordinary and routine investments. Additionally, items like volunteer labor, sales for convenience of members, like a cafeteria sale, selling donated merchandise in a thrift store, which many of you often see, and certain bingo activities are also exempt. If you have any questions on what may qualify as unrelated business income tax, it's extremely important to consult a tax professional and be proactive before you get the IRS involved. With that, I'll now turn it back over to Sam to cover how watchdog agencies use the organization's Form 990.
Thanks, Brooke. Next, we'd like to briefly talk about organizations that evaluate other nonprofit organizations. These are commonly referred to as watchdog agencies. What are charity watchdog agencies? These are generally nonprofit organizations that are providing information, ratings, and reviews. They also use information is primarily gathered from the Form 990 as it's a public document. Donors rely on these agencies to seek information regarding whether they're favorable ratings or not. The largest agencies involved are Charity Navigator, GuideStar/Candid, and the Better Business Bureau. And why are charitable ratings important? It seems like more nonprofits than ever have seen declines in the trust factor worldwide, and that the individual donor population has begun to see some shrinkage over time. Less than 50% of U.S. households are now making donations. So this is why these ratings become important. First agency we're going to cover is Charity Navigator. This is the largest nonprofit evaluator that's out there and the most widely used that we've seen. Charity Navigator was founded in 2002 by Paul and Marion Dugan in order to make an impactful charitable giving easier for all. It uses a 0 to 4-star rating scale that's used, and it rates approximately 225,000 organizations. It uses an Encompass rating system, which provides a comprehensive analysis of charitable performance across 4 domains. They're generally called beacons. The first is impact and measurement. This is how you find out how much benefit the charity's programs achieve relative to the cost that's required to run these. The second is accountability and finance. You're finding out if the charity is accountable, transparent, and has financially efficient and sustainable operations. Third is leadership and adaptability. We're finding out if the charity has the leadership capacity, strategic plan, and ability to adapt and respond to the changing circumstances in order to better achieve its mission. And last is culture and community, finding out if the charity implements practices that strengthen its overall organizational health and its responsiveness to its beneficiaries. Charity Navigator relies heavily on the Form 990 as far as its information that it uses. Some of the key data that it uses involves its board members, independent board members, and the percentage of their audit, review, compilation of financial statements and whether those are achieved. Policies and procedures. This is important and was added several years ago. It evaluates whistleblower policies, document retention, board minutes, 990 review process. All are determined in whether you are achieving these or not. And then last, of course, are the financial side, the financial metrics. These involve liabilities to assets, program expense ratios, fundraising efficiencies, working capital. This is all key information that's pulled from the Form 990 and used by Charity Navigator as part of its evaluation process. The next agency is formerly known as GuideStar and also known as Candid now. Candid was started on February 1st, 2019 when the Foundation Center and GuideStar joined forces. This merger brought together large amounts of data on both foundations and nonprofits with the goal of providing insights and analysis on each of the nonprofit organizations. Candid uses a bronze to platinum seal rating that it gives to organizations. The new organization is committed to providing access to data, increasing transparency in the social sector. You can see the rating systems, and it's important from there. The next agency is the Better Business Bureau, or give.org. The BBB Wise Giving Alliance is a charity monitoring organization and has been around for a number of years. Actually, under previous names, it's been around since the 1920s. BBB's give.org evaluates charities using a 20-standard system for charity accountability to help donors verify the trustworthiness of soliciting organizations and to strengthen charitable practices. This rating system is pretty simple. The standard is either met or it's not met and results in the reporting from there. These standards were developed with the help of a charitable community in addressing 4 key themes: governance, effectiveness through results reports, finances, and truthful and transparent representations. These standards really set the baseline for ethical governance, responsible fundraising, and transparency of financial operations. This concludes our presentation today. We want to thank you for joining us. CPE certificates will be issued from the events at rgcocpa.com email address. Please join us for our final summer CPE training session next Wednesday, July 31st at 9 a.m. for the 2024 tax update, which will be presented by Alicia Holloway and Janelle Edgar. One last reminder is that our firm will be hosting our annual Nonprofit Appreciation Day again this year on Wednesday, October the 30th at Higgins Hall. Please save the date as we are planning another fantastic event that's free of charge to all. Thank you again and have a great rest of your day.